Good morning to all traders and welcome to today's market insights video provided to you by Orbex. This is here, and today I'm gonna start as usually do on Monday with the indices. We're gonna talk about the S&P as well as the US index. Now, last week we've seen the US markets really taking a plunge. That was expected if we take into consideration that we've had an increase of like 30% since the huge decline back in March. Now, obviously, this rally, in my opinion, as we expressed ourselves quite a few times in the past, was quite detached from the economic reality. So we had a reality check last Thursday. On Friday, we saw some sort of correction, which I don't really think is going to last. And since then, markets started the week as well on a bad footing. Now, Beijing as well at the same time is bracing for a second wave of coronavirus. And obviously the concerns now are going to be spilled over into the other currencies as well as the equities, of course, casting doubts about the overall recovery and how this small correction on Friday is going to pan out in the end. Now, the situation with the European Union is a bit worrisome as well. Today and tomorrow as well, a lot of countries are reopening, so they will start accepting a lot of tourists. Though the fact that the European Union is reopening is also adding perhaps concerns onto how the pandemic is going to continue. Is it going to be an escalation or de-escalation? We might see actually that in the next few weeks, what's happening on the European side. We also have the UK/EU talks continuing, and it's going to be a very interesting week since also was in the pound plunging last week due to the UK's hard stance that the extension is not really possible. Now, without further ado, I want to take you to the S&P first, and then we're going to talk about the US index trading against the basket of currencies majors. We talked about this W, X, and Y move, okay, for a while. Last week, we identified this move to the upside as the completion, pretty much, right? And this is exactly what happened. We said this is a WX and Y in YX. And since that was completed, we are expecting now another ABC move as we did in W, okay? Well, we had a very good run up to nearly the 88.6 Fibonacci retracement, which is the 100 Fibonacci of A and B, as well as 161 Fibonacci of the W wave, W and X, okay? So we did say this is a very critical level. And then we started seeing markets falling impulsively. We had 1, 2, 3, 4, and we are actually looking for wave 5. In my opinion, it would be ideal to take the 2971, which is the previous high for W, right? That would be the end of wave A. Then we'll correct higher, perhaps to 3136 or so. We could go literally up to 3188. The truth is, if we break above that, of course, then we're probably looking for more upside, but I'm not really a fan of that scenario. So anyway, an upside can be expected maybe in the following few days, and then another move to the downside, take out wave C, which is also wave A. Now wave A could finish anywhere below that level. So we're looking potentially 2930 or even 2790, the 50 Fibonacci of this move to the downside. And from there, we're going to get wave B, potentially then have a retest on the 2971 and move lower down for fresh lows. And these lows are going to take us below the 2120 mark or so. Okay, so I at least expect this slide to continue. However, in the shorter term, I do see an upcoming pullback. Now, on the US index, that was also an amazing opportunity we identified, well, I would say in Q4 last year. And we've been waiting this triangle pattern to break. That broke, we moved impulsively down. We ended at 2618. I would say that is probably the 270 or so. around the 95.70, right? That was wave one, primary wave one. And since we're moving up at the moment impulsively, 1, 2, 3, 4, and 5, well, this looks like to me as an ABC, okay? An ABC to take out wave 2 in the primary degree. Now, note, I do have this labeled as 1, 2, 3, 4, 5 because I think it's impulsive. However, impulsive moves can be also of the corrective style. So we could be on an ABC pattern here as well, okay? So it could just be a 3 rather than a 5, okay? Well, for that, we still have a lot of time, okay? But in the meantime, okay, we've done wave 1. So I also see a small retracement down here, potentially to 96.40 or so, but we don't really want to move below wave 1, which is that level exactly, and then move all the way up to take out wave C. Now, wave C can end anywhere above 97.46, but due to this impulsion with the downside, I think that wave 2 is going to take us perhaps to the 50 Fibonacci retracement of this move to the downside around the 98.80. Okay, so this will be all for the day. Well, trade safe, and I'll see you again tomorrow on our FX majors.